Hey, good morning, everyone. Brian Hoops here, Midwest Market Solutions. This is our Market Insider TV opening commentary. Friday, it's August the 8th. Good morning, everyone. Hope you're ready for last trading day of the week. We're getting closer and closer to the supply and demand report that comes out on Tuesday morning. And we'll be talking about the tendencies to go into that report and how the market reacts following the report's release. We'll talk about that here in just a second as we get into the overnight trade first. Dollar index a little bit firmer in here. Natural gas is slightly weaker while crude oil's higher. Stock market is higher, but off of session highs. Gold hit over 35.35 in the overnight in the December contract and has pulled back. So it looks like we're higher, 32. We are, but boy, we really spiked higher yesterday and last night and have come back off of those highs. Corn is a half lower. Beans down 3. And the wheat fractionally higher. Wheat's kind of been the upside leader, especially Kansas City this week, because that's the market we've noted has the most bullish spread activity. Corn and soybeans certainly do not at this time. So let's get into what's happening as far as news here. Follow us on Twitter. Stay up to date on the latest news, as well as our website, MidwestMarketSolutions.com. All right, first of all, weather, 6-10 day and the 8-14 day, pretty much in line here. Above normal temperatures, but above normal precipitation. It's a bearish forecast for grains is nearly ideal as we fill out the soybean pods and corn ears. It's very hot here where we're located this weekend, 97, 98, no rain until maybe next week when it cools off a little bit into the low 90s. But a lot of the Midwest is seeing a lot of rain this week, and a lot of Iowa, good portions of Iowa getting tremendous amounts of rain that really helps this crop out to withstand any heat and stress. So that supply and demand report that I talked about comes out on Tuesday of next week at 11 a.m. Average trade gas is looking for a bump in yields of about 3.3 bushels per acre, and production just shy of 16 billion bushels. That produces ending stocks at 1.918 billion bushels. So even with this big crop, we still have a lot of demand. In fact, exports, as I noted yesterday on RFD TV, exports that were released yesterday morning, our new crop sales are double what they were a year ago for this time. And we're off to a great start for our corn exports. Soybean yields expected to be slightly increased, which is a pretty reasonable expectation for this early in the growing season at 53 million bushels. Production at 4.374 billion bushels. That produces ending stocks of 358. That would be increased from 310 a month ago. And all wheat will have a production forecast there at down slightly from a month ago, and ending stocks also down just slightly from last month. As far as the report goes, in the last 12 years, corn yields have actually increased 7 times in the last 12 years. Average is 3.5 bushels per acre. And decreased only 5 times. Meanwhile, soybean yields have gone up 8 out of the last 12 years and gone down 3 times, held steady once. So odds are we'll see a small increase in production, and I think we will on Tuesday's report. Just a question of how much of an increase will we see in both corn and soybeans. With the sharp rally yesterday, August feeder cattle futures are premium to the index by about $9. And we talked 9 to 10. That we're talking usually that's a bearish and finds some selling interest, but so far the money flow has been to the upside, and it would be hard just to step in front of this market anticipating that because the premium to the index that we're going to start falling here sharply. August live cattle are now trading higher than last week's cash trade. We generally say last week's trade was 235 to 236, and we closed at 238.75. So market's anticipating stronger cash trade this week. We have not seen that yet. In fact, we have not seen any bids. Asking prices are that 238 to 240 range, and cash is higher. Cutout values have surged. We were higher yesterday in the cutouts. That gives us a little bit better packer margins to work with, although they are still pretty deeply in the red. So we'll be on the lookout for higher cash trade this week. We'll send out text updates when that cash trade develops and breaks out. Make sure you sign up for that. I'll be on RFD TV this morning talking about the markets. Hope you have a chance to tune in. Good luck, good trading today. This has been Brian Hoops for Midwest Markets.